you. Good morning, good morning to you. Good morning, good morning. Won't you share with a friend or two? Good morning, good morning to you. You. Good morning, good morning, good morning to you. You. Good morning, good morning to you. And many more, and many more, and many more. Good morning, good morning, good morning, and welcome, welcome, welcome. I'm your host, Shantae Charles, and this is Daring Dialogues. Today is Get Free Friday, Finance Friday, Health and Wealth Friday, and we are today focused in on Finance Friday. We are reading from the book Moving Beyond Broke, The Power of Perseverance in Your Personal Finance by Dasha Kennedy. And we're only going to be covering this book today. We're going to be doing a short show. So I'm going to just cover this book and then we'll have a little bit of talk back about finances. And today's subject is really talking about banks and banking. So we're going to look at what exactly is a bank, choosing the right kind of account to meet your needs and your goals. And we're going to talk about three kinds of accounts today: checking, savings, and money markets. All right. So let's hop right in. Last time, Dasha, we were reading about her getting in trouble for overspending on an account that she was sharing with her mother, and how that overspending led her mother to helping her to get her own bank account. So now we're kind of moving from her own personal story into the general basics about banking. Um, One thing we do know is that there has been some valid criticism and some valid distrust in the Black community when it comes to banks and banking. So I don't necessarily um, I don't knock anybody, especially in the Black community, who says, I don't use banks. But I will say that we need to understand what banks are. We need to understand how banks can work for us. There was a book we read a couple of seasons ago, lots of seasons ago actually, that was really just about money in general and what banks do. And so she's coming back and she's going to talk about it from having worked in the banking industry herself. So I'm very interested in finding out what she's going to share, to see if that sort of aligns with some things that we already know about banking. All right. Let's be the change and do it with confidence. As empowering as opening a bank account can be, it can also be extremely confusing. There are so many financial institutions to choose from now, so many different kinds of accounts, and endless fine print that may or may not be a big deal. I often hear from folks who feel so intimidated by all the choices in financial jargon, it keeps them from opening any bank account at all. Then, once you have an account, there's the lingering question of whether you're using it to its fullest potential or whether another option would serve you better. It's tempting to dismiss the banking conversation as basic. In fact, most personal finance advice overlooks it completely and focuses solely on topics like budgeting, saving, and investing. But that's a big oversight. Yes, talking about bank accounts can feel as basic as ordering a pumpkin spice latte at a coffee shop. But walk with me on this. Where you bank is central to your wealth building ambitions. You've got to get this right. Now, I know one of the conversations I've been hearing recently online has been people saying, I've been banking with so and so for so many years. And when it comes time for things I actually need, like maybe a short term loan or a home loan or something like that, I cannot get my bank to give me the loan. But yet I've been banking with them for 5 years, 10 years, 15 years. What is actually going on here? And so I hope in this particular chapter that she will start to address some of that. Opening a bank account is one of the most important steps in your financial journey. I'm going to take the mystery out of the process so you can make smart choices without feeling lost or doubting yourself. And I'll start with a question that most people who are new to money management may not even realize that they should be asking. What exactly is a bank? I know, right? I wish someone had explained this to me when I was just starting out. A bank is a financial institution that acts as a safe place for you to deposit and, keyword, grow your money. And it frequently offers other financial products such as loans and credit lines. Banks make most of their money by using a part of the funds their customers deposit into checking and savings accounts as capital to grant loans to individuals and businesses. The interest they charge for these loans is how they make a profit. Banks also make money from charging customers a variety of fees, such as ATM, late fees, overdraft fees, loan origination fees, or fees for asset management and investment. In other words, fees, fees, fees is how banks make their profit. Reliable banks are insured by the Federal Deposit Insurance Corporation, FDIC, which is supposed to be an independent agency created by Congress to maintain stability and public confidence in the U.S. financial system, and this was created in 1933. The FDIC provides deposit insurance for your funds up to $250,000 in the event of a bank collapse. Pay attention to what this administration is trying to do around FDIC and whether that insurance balance, that insurance baseline, right, is going to remain the same. In other words, the FDIC pays you up to $250,000 of your account balance, even if your bank shuts down. If FDIC insurance, excuse me, if FDIC insurance had been established at the time that the Freedmen's Bank collapsed with all of those black dollars, those black families would not have lost all of their savings. Banks play a major role in our economy by facilitating the flow of money and providing essential financial services. They serve as a go-between between people who have excess money, depositors, and those who need to borrow money, borrowers. This is a long way from keeping cash under the mattress or in a shoebox in the closet. Banks typically offer checking and savings accounts and loan products such as home mortgages, car loans, and personal loans to finance major purchases or cover emergency expenses. I'm often asked how bank loans differ from a payday loan, which is an important question. Payday loans are easy and quick to apply for, but they need to be repaid by your next payday. Charge high interest rates, and they do have hidden fees. Bank loans generally have much lower interest rates, give you more time to pay them back, while requiring a more complex application. Dealing with the annoyance of a longer application is worth it because one of the main reasons is to determine your ability to pay back the loan, making it less risky for both you and the bank to enter into an agreement. The less risk, the less it costs. Good morning, good morning, good morning. The average payday loan charges 400% interest, while the average personal loan from a bank offers interest rates between 5% and 36%. The bank takes into consideration how much money you make, how much debt you already have, and how reliably you've paid other loans back in the past. This information determines how much money the bank will lend you, the interest rate, and how much time you'll have to repay the loan. Loan interest rates terms vary depending on the amount you borrow, your credit history and score, and competitors' rates. The federal funds rate is set by the Federal Reserve and dictates how much it costs for banks to borrow money from other banks, which impacts how much the bank will charge you to borrow money from them. Because the federal funds rate is the same for all U.S. banks, it makes the interest rates for your personal loan more stable and competitive. All these banking regulations help keep the playing field fairly even and make banks a safer, more stable option for accessing financial services and borrowing money than payday loans in check cashing places. However, there are some important differences in the fine print when comparing banks to each other, and that's where it can get a bit trickier. Banks differ in size, in structure, and in service offerings. In your community, you'll likely have the option to choose between local or regional banks and credit unions and large national or even international institutions. Now, and she'll probably get into talking about a credit union versus a bank. But one of the things that I feel Black Americans really do need to pay attention to when it comes for searching out a bank has to do with their discrimination history. So when I'm dealing with young people and they are getting ready to open a banking account, the first thing I tell them to do is look up banks and institutions that have a history of racial discrimination, workplace discrimination. And somebody might say, well, why does that matter? It matters because I don't want to be giving my funds to a bank that has a history of discriminating against people that look like me. So, racial discrimination, gender discrimination, veteran discrimination, disabled discrimination. Look at those things. And then from there, pick out 2 to 3 banks that you want to research further. Now, she talks here about credit unions. Let's go into what she says here. Credit unions are hyper local. They're your actual neighbors serving as financial institutions for your community or region. While banks are for profit companies, credit unions are not for profit and distribute their profits among the members. They don't offer as many services as giant national bank chains, but they have a human touch, in addition to offering lower interest and reduced fees. And because they're local, they're much more interested in the community and in helping you out as their customer. When I applied to get a car loan, I was denied by several banks, including the one I worked for. After they reviewed my application, I was also denied initially by a credit union. However, a customer representative called me a day later, asked me more questions about my employment, my need for the loan, and how much I could afford to pay every month. After the conversation, the credit union overturned the denial and approved me to purchase my first car. And that's one of the reasons why I tell people that even if you decide to go with a bank, also open up an account with a credit union. Mhm. Credit unions, with their community oriented approach, are often more willing to consider individual circumstances, take the time to understand a member's financial needs, and work toward finding solutions. With larger banks, the decision making process can sometimes feel impersonal and heavily reliant on strict criteria. However, they also offer the largest variety of services and bank accounts. Sometimes smaller regional banks can provide the sweet spot that you're looking for, but it's all about your personal preferences. Before you dig into the process of choosing a financial institution, it helps to know what kind of account you need and then work from there. That way, you can vet each place based first on whether they actually have what you're looking for, and then on the details of what they offer for the type of account that you need. Choosing the right type of account to meet your needs and your goals. The first question to ask yourself after you've asked yourself, does this bank have a history of discrimination? is this: why do I need this account and how will I use it? Even if you've already opened an account, it's still important to take a step back to consider your financial needs and goals. Most people primarily need a bank account for direct deposits of the wages or the salary that they earn. In this case, a basic checking account to manage your everyday expenses might be all you need. But how about a savings account with a competitive interest rate to grow your money and set it aside for future goals or emergencies? That's what I should have opened when my mom suggested I put away $20 a month, and I eventually did. Looking beyond checking and savings, as your savings grows, you may eventually be interested in the other financial products for investing, growing your business, or buying a home. Let's dig into the details of the types of accounts available to fit your financial goals. Checking accounts. This is the most basic account nearly everyone will get the most use out of for any of your day-to-day transactions. A checking account allows you to deposit your income, to pay your bills, to withdraw cash, and access your funds through various channels like debit cards, checks, and digital transfers. As you're just starting out, it helps to look for a checking account that offers low or no monthly maintenance fees and no minimum balance. Most checking accounts come with a debit card that is directly linked to the account. When you make a purchase using that card, the money is immediately deducted. As I learned the hard way, though, depending on your bank's overdraft protection rules, you may be able to make purchases with your debit card after your money has run out, putting you in the negative. This will depend on whether your account has overdraft protection and the terms of that protection. Also, pay attention to details like your debit card's daily transaction limits. How many transactions can you make per day? Your ATM access and ATM fees if you're not using your own bank's ATM, and fraud protection. I'll go into more detail on each of these later in this chapter. Savings accounts. These are safe places to store your money over longer periods of time while earning interest on your account balance. They can provide a buffer for emergency expenses and help you work towards savings goals like taking your children on a vacation or replacing your ancient laptop in the near future. They often require a minimum balance at all times, which is one of the main differences from a checking account, aside from offering higher interest rates. High-yield savings accounts are a subtype typically offered by online-only banks that operate with lower overhead costs, allowing them to pass on better interest rates to their customers. They're an excellent option to earn more on your savings balance if access to a local branch isn't very important to you. Look for a savings account with competitive interest rates, a low minimum balance requirement, and low or no monthly maintenance fees. Now, to be clear, you don't need to have a savings account to save money. You can save in your checking account, but having a separate account for your savings often helps on a practical level and with your mindset. For one thing, you can't access those funds with your debit card, so they're safe from your impulsive buying or any fraudulent activity on your card. There's also something to be said for keeping your savings separate from the account that you do your daily spending and bill paying from. It earmarks that money for something beyond everyday expenses and offers a sense of financial security. Savings accounts also typically offer higher interest rates than checking, which helps your money grow while it sits there, even if it's just a little. Money market accounts. This hybrid account blends features of both checking and savings accounts. Money market accounts typically offer higher interest rates than regular savings accounts, while also providing limited check writing abilities to access the funds. These accounts strike a balance between earning and maintaining some fund liquidity. Here's a quick overview comparing the advantages and disadvantages of each account type so you can make an informed choice. So in her book here, she's got a graphic, a visual graphic here of the different kinds of accounts and what are the advantages and what are the disadvantages. When we come back to her book on next week, we're going to talk about speed dating banks to find your financial soulmate. How do you go in and how do you take a look at what the banks are offering before you make a final decision? All right. So this is what I wanted to share with you on today. I hope that you learned something today or something that you can pass on to someone who is maybe in their beginning stages of life. Usually some of us know at least high schoolers, college students who may be going into the financial banking side and process for the very first time. This is some good information to pass on. If you're an adult and you say, hey, I have never had a bank account, I don't have a checking account, I don't have checks, I've always been wary about banks. Hopefully, I have said something today that will help you to start thinking about whether or not you should have at least one account. And if you're that wary, I would probably say start out with a credit union. Find your local credit union, go in, talk with a financial advisor. I am not a financial advisor, so I do not advise people on bank accounting. I can only tell you what works for me. Um, I have accounts at two major banks, and I have an account at a local credit union. Um, and I know she's probably going to go into it eventually, but I like CDs as opposed to money market accounts. I like savings accounts, regular checking, and CDs, and IRA and Roth IRA, which she's probably going to go into in her book when it comes to investing. Um, but yeah, if you are wary about having your money out of your hands, I would probably say start with a credit union. All right. At this time, I'm going to bring on my fellow host, Pastor Ben. I'm going to send you the link. And everyone else, give me one moment. I will be right back. All right. Let me try it again. No, it's not letting me do it. Oh, let's see. How can I do this? Let me try another way. Dang it. It's not letting me do it. I'm in a conundrum here. Usually if I try it again, it'll allow me to go in. All right, it's not allowing me to do it today. I don't know why, but that is what I had for you today. So Pastor Ben, you'll have to hopefully hold on to your comments that you want to make for today. We will be back on Monday. We have one more full week of Daring Dialogues, and then we'll be going on winter break. And so I thank you all for your time and attention today. Thank you for tuning in to this conversation. When this broadcast airs, you can come back. You can leave your comments. You can leave your thoughts. You can tell us about your experiences with banking. Do you trust banks at all? Do you not trust banks? What bank have you found to be useful and helpful to you? What is something you wish you knew about banking before you got started using banks? All right, or credit unions, either one. This has been another episode of Daring Dialogues, and I've been your host today, Shantae Charles. Remember, light is the most daring opposition to evil. So go out and be some light today. Take care, everyone. Be well, and most importantly, be light.